David, good morning. Thanks for being here with us today. What do you think about the impact of the coronavirus and how much it's pressuring the price of oil in the energy markets? Is it overstated, or do you think it's fair to say, yes, demand actually will take a pretty big hit because of everything that we know, at least so far, about the coronavirus and how it's keeping folks at home?
Yeah, I think it's weighed very heavily on the spot price of crude. I think OPEC ministers are very aware of that. They're keen to try and arrest any further slide. Frankly, people don't know exactly how long the virus is going to last and the sort of economic hit it's going to impose on China and the surrounding Asia-Pacific region. There are estimates out there that it could cut annual demand in 2020 by anything between 300 and 500,000 barrels per day. So OPEC ministers, or some OPEC ministers, are keen to try and preempt any further slide.
Very interesting stuff. I mean, is there any indication, since OPEC is sort of divided right now, about where they're going to go and how they're going to handle production, because there is still so much we don't know about the virus?
Yeah, and it's complicated by the fact that there's nearly 1 million barrels a day of supply from Libya, an OPEC member, that is actually shut in at the moment. So I think there's a debate within the organization about whether a sort of preemptive cut of, let's say, another 500,000 barrels per day at this point is really going to help, or whether it's premature to start thinking about that. And I think there is probably a fairly vigorous debate within the organization. I suspect they don't want prices to go further or much further below $50 for the sake of their own domestic budgets. But it's not a clear-cut decision. The risk is that we have more problems in Libya. That supply remains offline for a long time, and if they've cut by a further 500,000 barrels per day and the coronavirus clears up, have they, prompted a spike in prices, which could be damaging for the global economy?
And I understand, of course, and we mentioned that you just wrapped up the America's Crude Summit. When everyone is sort of putting on their honesty hats, what are they most worried about? Is it the shift in focus in ESG investing and how that may ultimately impact the investment in oil companies down the road? I mean, what was the big talk of the conference?
Yeah, I mean, I think there are obvious concerns about the short term, the state of the market, because of coronavirus and the pace of the economic recovery. There were concerns also about whether the China-US trade war ultimately is resolved in a more comprehensive fashion. I think you identify environment. There was very much an appreciation by the major players in the upstream, in the Permian and elsewhere, that they have to step up to the plate and prove that their operations are sustainable. On the other hand, I think there was generally medium-term and long-term optimism that, there's still growth ahead for shale and for U.S. exports into global markets, and particularly into the Asia-Pacific. Once we get beyond this coronavirus, I think there's an awful lot of optimism that extra barrels can leave the U.S. Gulf Coast and find a home in the Asia-Pacific region. So recovery in Asia, I think, was something that was very much on people's minds.